Hey there, Lynn and Joseph Klosik. We are back with another video, and it is now time here at the end of the first quarter of 2026 that we're going to go over some of the same stats that we're learning to touch on every quarter or maybe more frequently. And one that we like to talk about are the tale of two markets. Joseph's going to break down some of the stats about where we saw the first part of 2026 wrap up, what sellers and buyers kind of experienced in the market, and they're going to tell you a little bit more about some things we have planned this year throughout our video series and just getting together with people in the Charleston area.
Yeah, absolutely. So we are going to go over, like she said, Q1 stats, and we do these big stats quarterly because it gives us more time and it actually creates better trend. But we also do monitor this on a monthly basis, so be on the lookout because every now and then we will have a stat come up. We're like, hey, we need to share that. So we're going to kind of walk through a couple different things here. The first thing is we're just going to do an overall review of what we saw in two big indicators as a consumer, what it looked like, and that is how many homes sold, and then of course what the prices were doing, because those are the big thing. And then we're going to break down to, of the ones that did sell, what it took to sell them, right? How long it took to sell them, what they got from a list price to sales price, because those are the two big things that we talk about from an expectation standpoint when we're talking to sellers. And then with buyers, when you're talking about list price to sale price, and then how long it's been on the market, how do you use that with your buyers?
Well, it just helps us identify, if often I'll reach out to that seller's agent and just find out what's been going on, why has it been on the market. I do some exploratory conversation, but then unfortunately, if it's been on the market longer than maybe what the average days are, which you can do that research, then the buyer and I will talk about how that will work in our advantage. And I try to bring that in a nice way, but it's kind of like, okay, y'all may have done a price reduction or not, but we're now seeing that it's a little past what it should be to get a contract.
Yeah, and it's really important. Lynn mentioned the tale of two markets. It's really important when she does that, that kind of helps delineate where they are in that market. So the first thing we're going to do, if we look at this first slide here, we're going to talk about kind of four big areas. Number one, we talked about the monthly home sales. So in Q1, honestly, we didn't see a big change, right? It was only about an increase of less than 1%, 0.9% of the number of homes that sold. That's been interesting. We were predicting a little bit higher. We were predicting 2026 to kind of pull us out of this market a little bit. I don't know that that's a bad thing though, because one of the things we were not predicting was conflict in the Middle East. So when you've got pretty much in wartime, that may change it. We also obviously have affordability that may slow it down. So it's just something to keep an eye on, but it was a little bit of a flat run from 2025 to 2026. That means we'll just have to keep an eye on the rest of the year.
And one perspective is one could say, okay, there's stability amidst that, which means if it could have gone higher without the conflict, it's actually a pretty good sign if we're just staying stable.
Yeah, exactly. It's not, and again, one quarter doesn't make a whole market. We'll keep an eye on it.
Right.
And we always did think that it'd probably be later in the year before we saw that uptick at a significant level anyway.
So we're going to just keep watching for that, right?
100%. So going back to slide one of the next thing we're going to talk about is the median sales price. And we did see a jump, right? We saw the median sales price jump about 4.5%. The median sales price being $480,000. So that's good in the sense of we want a healthy market that's starting to see kind of values at that 3% over time, closer to 2. And we were actually a little low. We're not really flatlined, but it was below 2%. So this is a good jump. So it's interesting. The number of sales plateaued, but the price of the sales is still going up a little bit.
So your asset is still somewhat protected by just the nature of real estate, but you just kind of need to pay attention to all of that.
Yeah. So again, that's just something to keep in mind from a consumer standpoint, is if you're looking at price or house values and what the housing market's doing, those are two important stats to look at. So now let's look at what happened when you did sell the property, right? When the properties that sold. So all these next stats are based on homes that successfully closed in Q1. So the first one we're going to talk about is what we call list price to sales price. So when you put your home on the market at a certain price, what percentage of that price did you get? And we did see that go down. It's at 96.6%. That's a little bit of a drop, about a 1-point drop, a little less than 1% down from last year. And that just means that on average, or excuse me, in a median, when someone, let's just say for round numbers, if you put your home on at $500,000, you can expect to get about 96.6% of list price on that. That is when you get that 96.6%, you do start to kind of raise an eyebrow a little bit on that. That's a little bit,
you don't love it.
You don't love it, right? But again, keep in mind, These next two stats, this one and the next one, those really don't exist for anyone because this is a combination of the two markets that we talked about earlier, and that'll make more sense here in a couple of minutes. And then the next one, median days on market, how long did it take homes to sell, right? And this is one that people are looking at, and this was median days on market was at 49. That's up 8 days from last year. So not a huge jump, 8 days, but now all of a sudden when we had median days on market and what felt like in 21, 22 of 2 minutes,
right.
Now we're at 49 days, you start to feel that a little bit more, and that's where you start to hear people that homes are just sitting, yada, yada, yada. So that's kind of the overall in the market. Let's dive down into now when we talk about tail two markets.
Well, and not to brag a little bit, but we do research in other market centers, other markets, because we have colleagues in that area, and Charleston's still lower. If there's a jump, others are seeing an increase. Yep. Ours are still not as high as others, so that can be encouraging if you're a Charleston resident.
Yeah. So let's jump into this whole category of when we say a tale of two markets. And what we mean by that is when a home sells, it was either in the market. Well, they were both, I guess, in the market, you could argue. All of them were in the market, but it's either in the market or out of the market. What we mean by that is they were priced correctly. And the number one way that we know if a home is priced correctly when it goes on the market is whether or not they had to reduce their price before they got a contract. And so this next stat on the second slide here is 49.8% of the homes that sold actually had to do a price reduction. That's half. I mean, it's half. So that's interesting to know. Now, that doesn't mean values are going down, because as we said earlier, we still had a 4.5% increase in median sales price. That just meant in order to successfully get a sale, half the market had to do a price reduction, which means, in my opinion, broad brush statement, no offense, yet this is the reality of it, because the maths is, in my opinion, that means that they were priced incorrectly.
Yeah, they started a little too high.
They did, and that's just a reality, and that's no judgment on them, but if they were priced correctly, they would have gotten a contract. So what we know is there are two markets, those that priced correctly, got a contract before reduction, and those who didn't. So here's the big part. This now goes back into the other two numbers. What was the list price to sales price ratio, and how long it took the home to sell? And these numbers changed drastically. So two things. One thing you need to consider is what it looks like to actually do a price reduction. So this next slide talks about that when they did a price reduction in order to get a contract, that price reduction was a median of 5.7%. Now, if you look all the way on the right-hand side, that's the average of all of the properties there, was the median 5.7%. If you look at each one of these price points, you can see it varies greatly. In the lower price range, they had to do a higher price reduction, kind of goes back into the middle a little lower, and then the high price point, they had to do a higher price reduction there in order to get a contract. So when we talk price reductions, if you're looking at selling your property and you say, well, I'll drop the price later, it's not normally going to be a price drop of a couple of $1,000s. You actually would have to do a pretty significant one to find new buyers.
Yeah, you're going to want to get in front of new eyes. And the thing that's to remember about this is this can get over, like hearing us kind of share it all in general, it can be maybe a little bit overwhelming. Here's what's important. Your price point in your neighborhood has very specific ways of looking to see what that means for you. You don't need to know all of this for Charleston, but you need to know that these are the questions you should ask your real estate agent when you're sitting at the table to find out what's my price point and in my neighborhood. So this is a general overview of Charleston, but remember, we'll tailor it to you in any sort of listing conversation.
So now that we've kind of identified what it takes to be in the right market and what may get you out of market, now let's look at how that really shows up with those two big stats we talked about earlier. And the first one, if we look at this next slide, is what we call the price reduction effect. And this means what happens to your list price to sales price ratio if you price correctly versus if you not. This one's very telling. As you can see in this next slide, almost across the board with a little bit of exceptions. If you price correctly and didn't have to do a reduction, you're getting 100% of list price to sales price. And that's just math. Right?
And we're seeing that. I mean, we are definitely seeing that. This is not just in stats. It's happening around our neighborhoods, even when there's a range of new construction or resale. So it's so important to decide, like, where do I want to be? And then get realistic about that so 100%. That you're not having awkward conversations down the road.
And then as you can see in here, if you did have to do a price reduction, instead of getting that 100% of list price, you're actually getting 92.2% of list price, as it shows. Again, all the totals are over on the right hand side, and then it does per price, each price point after that. That's a big number, and that actually completely changes what we were saying earlier, where the median is 96.6. That doesn't exist. You either priced correctly or you didn't. And if you didn't, you may really, you're getting a lot less than what you had originally anticipated. It doesn't mean you're losing money on your house. That's the part to keep in mind. It just means you weren't priced correctly when you first went on the market, and the market helped correct you.
Well, and you don't want to get too attached. We've said this numerous times in these videos. We really want to caution against getting attached to a number. If testing the market is your strategy, it's not a great strategy. Getting attached to a number means you're then going to have an emotional roller coaster when it sits too long or you get a contract. You're actually doing what you said you were going to do, but you may not have the emotional bandwidth to walk through that as long as it may take. And it's really important to just get real about that and to know thyself, because if you have a timeline, you cannot play around with the market right now.
No, 100%. And we haven't even gotten the timeline effect on this, and that is an important part. But so that's, again, a really good point. Now, here's the deal. So we're going to do one more stat when it comes to list price to sales price, because what typically happens is in our conversations with our sellers is they'll say, well, Joseph, I agree. I see what you're saying. I should be priced here, but I want to at least try it here and then go to your price, and then I'll get your price there. Well, what this next slide says is we call this kind of the negotiation element, right? Is you kind of want to try to price it up and then maybe come down. So this fifth slide here is the price reduction effect, and this is your percentage of your reduced list price. So what that means is, again, you had no price reduction on the far right-hand side. Obviously, you're going to get 100% because you didn't have to reduce the price. But if you did have to do a price reduction, you're now only getting 98.5% of the price when you got there correctly. So that's something to keep in mind, again, using that same price point. If seller comes in and says, yeah, sure, 500,000 will work, but I want to try it at 510, 520, whatever it is, and then go to 500. What this is telling us is statistically, when you go to that 500, you may not get the full 500 there. So it's something to keep in mind.
Yeah, and these are all the questions that you can ask again, because we always recommend you do this with an expert, someone who's licensed and reading this every day. You can get that information and then strategically plan that around your timeline.
Yeah, 100%.
So
one last thing.
Okay.
Yeah, we've got one last thing, and that's the timing. So we've just
Bear
talked.
with us here.
We've just talked numbers at this point. The last part and the last slide that I think is the most impactful is what the price reduction will do to your timing. So this last slide, the sixth slide here, is what the price reduction effect on days on market. What this is showing you is, we had said earlier the median price was 49, but what that really means is in the tale of two markets, if you price correctly, your median days on market is only 8. Which is not 49. Right. So those homes that closed in Q1, which again, remember, was 50% of them, actually about 50.2, 50.3% of them that were priced correctly, had a median days on market of 3. Okay. That's not a long time.
So those numbers that we kind of joke about, they're still there.
They are there.
You just have to be really smart about it to achieve that.
Yep, 100%. The challenge is the next bar over. 117 days, median days on market, if you had to do a price reduction. That's the part. That's the part we don't talk about enough, and quite frankly, we do a disservice if we don't know that, because then you are expecting it to only be 49 when actually, in that case, it could be more than twice as long as that. So again, what this stat is saying is, of the almost 50% that had to do a price reduction, their median days on market was 117. Again, that's the total. You can see in each price point how that breaks down.
So, I mean, there you go. You got more mortgage payments, you're cleaning out the house, you're having to keep it show ready. So there's also just some emotional cost to it that we just want to try to prevent you from having to go through. That's why we talk through all of this. So again, this is kind of our video series where we're just every quarter or more frequently, we're just sharing what we're finding in the market, because this is how we're talking with our clients or our potential clients. We also have periodic workshops and webinars around your path to home ownership. If you're thinking of selling your house, what's it really like to do that? We have webinars. We're just doing some creative ways to engage the community around all of these numbers, because home ownership, purchasing and selling, it's the most large transaction for the most part you'll do. And so we take it very seriously and want to make sure we are real thorough with that. So I think that concludes our conversation today.
It does. Yeah. Thank you so much. I know this was a lot of information. So if you have any questions, please don't hesitate to drop a comment below, reach out to us. We're happy to answer all those questions. Thank you so much.
Yeah, thank you. We have all these things to share with you, and we'd love for you to register for any of our workshops and webinars, and we will see you soon.